Let's take a look at these past picks from David Burrows, president of Barometer Capital Management. May 17th of 2012, you selected Mondelez International. This is the spin out from Kraft, and it was pretty fresh at that time. And did you hang out of your Kraft as well, or?
We had both the Kraft and the Mondelez. Ultimately, we exited the Kraft.
Okay.
Our focus back at that point was similar. We wanted to own things with predictable cash flows. Mondelez was going to have a higher growth rate than the grocery business, and I still think it's very attractive. We have pretty significant exposure to consumer staples as a group, and in fact, you can own this group just with a simple ETF, KXI, which gets you the consumer staples group as a whole, and it's been one of the most stable parts of the market. And I think, again, our clients are kind of looking for return with a risk characteristic they can live with, and this group is being revalued to higher multiples.
KXI gives you the likes of Carlsberg and Avon and others. What about Unilever? Do you hold that one?
We don't own
No?
Unilever, but we do own some Procter & Gamble. It's interesting, oftentimes market leadership comes from groups that have been out of favor for a long period of time and become under-owned. And we got used to paying very high earnings multiples for growth stocks in the 90s, and so everyone thinks, well, that's what you pay a high multiple for. In the 1960s, when you couldn't get income because of low interest rates, what people paid 45 to 60 times earnings for were the nifty 50 stocks, which were companies like General Foods and Procter & Gamble, because they could provide that yield. And I think that that's kind of where we're going over the next few years.
Right, interesting. All right, Abbott Labs, ABT, this one's also up by a similar amount, about 24% compared to last year. This is another spin. They spun out AbbVie. You didn't want the AbbVie, correct?
No, we stayed with the Abbott.
Right, okay.
Now, the pharmaceuticals group really has been about the best performing part of the market so far this year. We own also Pfizer, we own Johnson & Johnson, we own Merck. And again, very attractive dividend yields. These companies have become very efficient with their capital. You're getting good dividend growth, and again, very, very strong balance sheets. Just an interesting point. There's a number of pharmaceutical stocks that cost less to insure against default with credit default swaps than insuring against default of a treasury bond. So the markets assess these companies are less likely to default than the U.S. Treasury. Yet the yields are well and away higher, and they will provide dividend growth along the way. So it's a very attractive group as part of a portfolio.
You also recommended the cash. How much were you holding back then for clients about a year ago?
If you think about it, when we went into the summer of last year, we were facing some pretty significant headwinds from Europe.
Right.
And at times we do raise significant cash, which we put back to work through the course of last summer. If we had a fault last year, we were probably a little too cautious because we can't afford to go through a weekend and have a binary event on Monday morning. I think a lot of those big tail risks have been pushed back as investors have come to believe that the central bankers are dead serious about doing whatever it takes to try and put a floor under asset prices. And until that changes, I think you have to be focusing on things that benefit from that monetary stimulus.
This time you selected cash, it was probably just a few weeks before Draghi made his now famous statement, whatever it takes.
That's exactly right.
Yeah.
And I think that they have made it more than clear that they simply can't afford to go through another significant crisis. So whether or not ultimately they'll be able to transmit that monetary stimulus through into the real economy, that's another question. But in the meantime, it lifts financial assets and puts basically a floor underneath in the short run that you kind of have to say, well, this is something that's here to stay for a while.
David, we'll take a pause here. We'll come right back. We have a half an hour to go here with David Burrows. All sorts of questions all lined up for him on North American Large Caps, but there's room for you if you want to send a question through the various means, and we'll get back to you after this.